With the EMI option, taking out loans has been much easier for many of us. Buying something in installments may appeal to your lifestyle needs, but it may lead you to a debt trap that could potentially ruin you. So, how is EMI making you fall into debt trap? Let's suppose you have taken a home loan. In this case, paying monthly EMIs and interest payments can add a lot of burden to you if your EMI is more than 50% of your monthly income. So today in this video, we'll talk about how can you repay your loan faster. For example, you can pay a 20 years loan in 10 to 15 years without any financial risk and pressure. In the end, I will also share with you two bonus tips with the help of which you can further decrease your loan tenure. Most of us take loans in the following cases: to buy your own home in the location of your choice, to buy a car of your choice, for education purposes, or for personal needs such as vacation trip abroad, maintenance repair of your home, or even a medical emergency. Have you ever realized to fulfill all of these goals how much extra money you are paying? First, let us understand what exactly is EMI. The EMI or equated monthly installment is the total amount of which principal plus interest is paid in the form of monthly or periodic installments. Let us now go to the three most important questions about EMI. First question is, how does EMI work? How does it help to pay back the loan's principal and interest? Second question is, how does the duration of your EMI affect your loan? Should you pay minimum or maximum EMI? Then at last, we'll understand what are the easiest and most disciplined ways of reducing the duration of your loan. When you first start paying EMIs, you might feel that you are repaying loan part more, and some portion might be going towards your interest payment. But is this assumption true? Let's understand this with an example, and for this, we'll go to the EMI calculator. Let's assume you take a loan amount of 20 lakh with a total loan term of 20 years and rate of interest 9%. In this case, your monthly EMI is 17,995 and total interest to be payable is 23 lakh 18,685. So have you noticed the interest you are paying is even more than the loan amount you have taken? So let's see if the loan duration is reduced, then how it affects your monthly EMI and interest. If we take 15 years loan tenure, your monthly EMIs is increased to 20,285 and your total interest to be payable is decreased to 16,51,360. We can notice that just by decreasing the loan tenure by 5 years, the interest payment has been reduced by approximately 6,67,000. So yes, your tenure of loan does affect your total interest payment. Now let's see that the majority of your EMI is going towards repayment or not. Let's make the loan tenure again to 20 years and go to the workings part. Here you can see that in the first year when you pay an EMI of 17,995, 15,000 is going towards interest payment and 2,995 is going towards principal payment. So the principal payment amount is very less as compared to interest payment in the starting few years. So even after paying 60 monthly EMIs and paying amount of 10,79,700, your outstanding loan amount will still remain 17,74,141 out of 20 lakh. So there is no significant reduction in your outstanding loan because all the money is going towards the interest. Gradually you will see while paying EMI month by month, principal payment amount to be increasing and interest payment to be decreasing. So if you want to repay the principal amount faster, then you have to pay extra EMI in the starting few years because in the starting few years, most of the amount is going towards interest. So if you pay extra EMIs, your principal payment amount will start increasing. Let's suppose you don't have an excessive EMI to pay every year. What should you do at that time? Don't worry. Here we have two effective tricks for you to repay your loan faster and also reduce your interest payment. First trick is pay some lump sum extra EMI in a particular year. Second trick is increasing your EMI amount by 5% every year. Let's understand both of these in detail. For understanding the first trick, I will go to the EMI lump sum calculator. Let's take the same example. You have taken a loan of 20 lakhs for 20 years at 9% rate of interest. Now your goal is to reduce your interest payable and also reduce your loan tenure. Let's say out of 240 months, you have paid 19 monthly EMIs, and in the 20th month, you have got an annual bonus or have lump sum amount of rupees 3 lakh that you think will not be of any use in the near future. So, in the 20th month, you decide to pay your lump sum of rupees 3 lakh along with your monthly EMI. So, when you prepay 3 lakh in the 20th month, your interest payable will be 14 lakh 16,975 and you will save approximately 9 lakh interest, and your loan tenure will also reduce by 66 months. So it's not compulsory to prepay in the 20th month. This depends upon your loan tenure and your availability of lump sum amount. Now we'll see our second trick, that is to increase our EMI amount by 5% every year. For this we are using EMI top up calculator. So when we increase our EMI by 5% every year, 12 months, that is 1 year, we can see that our interest payable has been 14 lakh 52,000 and we have saved an interest of approximately 8 lakh 66,000. So only by increasing our EMI by 5% every year, we can reduce our interest by 8 lakh 66,000 and also reduce our loan tenure by 95 months. So this is definitely a smart choice to reduce your interest repayment burden. Now, what should be your final takeaways? If you take a home loan, which has a longer loan tenure of 25 years, in this case, reduce that loan tenure from 25 years to at least 15 to 20 years. Pay lump sum EMI in a particular year or keep increasing the EMI for about 5% every year. Do you want to use this EMI calculators to calculate your monthly EMIs and interest according to your loans? Then I have shared the Excel sheet download link in the description section. You can download it from there. Before we conclude, here are two bonus steps that will further reduce your loan tenure and interest burden. First bonus tip is refinancing your home loan at a lower interest rate. In case you have already taken out a home loan and want to reduce the interest rate now, then go for another bank or financial institution that might be willing you to offer a loan at a lower interest rate. This can prove to be a great decision in reducing your interest repayment burden. Our second bonus tip is combining both the tricks, that is pay one lump sum EMI along with increasing your EMI about 5% every year. By following this step, your loan tenure and interest burden will significantly be reduced. If you found this video helpful, share this video with your friends and family to help them also pay off their loans faster. Also, let us know in the comment section below which of these methods you have used or going to use to get rid of your loan burden. To get further help, you can register for our 30 minutes free financial planning consultation using the registration link provided in the description. Last but not the least, don't forget to like this video and subscribe to this channel because we keep bringing such personal finance videos on a regular basis. That's it for today. Meet you soon. Bye bye.